welcome to this ET Now special. I'm Nayantara Rai coming to you from Toronto in Canada. ET Now has travelled with the Finance Minister Arun Jaitley to Toronto. He's here to hard sell the India story and to convince pension funds to invest in the infrastructure space back home. From here, Arun Jaitley is going to be travelling to Washington, D.C. for the global IMF and World Bank conference, and we're going to be following him there and getting you more special interviews as well as leading economists from Washington, D.C. Now, on day one, Arun Jaitley went to the Roadshow School of Management. It's Canada's #1 business school. It was a Sunday evening, and despite it being a Sunday, we saw more than 400 students actually attend that session, where Arun Jaitley, in a freewheeling conversation, spoke about the Indian economy. We also got him to react on the recent surgical strike that we saw of India against Pakistan. Before we go any further, here's Arun Jaitley in an exclusive conversation with me. I asked him why exactly he's here in Canada. I also got him to speak about the black money scheme. Arun Jaitley left New Delhi on the very same day that he held a press conference announcing the government has got more than 64,000 declarants to declare over 65,000 crore rupees in black money. Here's Arun Jaitley in conversation with ET Now.
Principal agenda is to meet investors for investing in India. Now you have very important pension funds in Canada, and these pension funds have a lot of investable surplus, and we have an investment gap, particularly in infrastructure, where we need a lot more people to invest. And therefore, along with the bankers and other financial sector companies, I have a series of meetings lined up with the various pension funds and other funds, because we are trying to get them to invest in India either independently or as a part of the National Infrastructure Investment Fund. So I have a series of meetings lined up with them tomorrow with all these investors, because India has a good story to tell. And compared to the rest of the world, India is moving much faster, and therefore the options for investors also to invest in the world are today quite limited. And India offers those opportunities. Our interest rates and the likely returns on those investments is going to be much higher than what they can get elsewhere. I am also meeting I have meetings lined up with the senior ministers in the Canadian government in order to discuss certain bilateral issues.
64,000 people had taken part in that declaration scheme, and about 65,000 crore rupees which is likely to go up. If I could get your reaction to that, it's about 1 crore average, as you said. It could go up, but also means about 30,000 crore rupees that comes into the central exchequer by that 45% tax.
Well, I think the revenue is important. And the revenue is important because every year when you match the revenues with the expenditure, if there is a fallout of certain incomes not otherwise coming to the government, then additional revenue certainly will help. And this is a revenue which we will get over a period of 2 financial years. 50% of it we get this year, 50% we get next year. But I think more important than the revenue is the fact that it's a part of a much larger campaign that the Prime Minister had initiated in the last 2 years in order to make India a tax-compliant nation. Those who have a lot of undisclosed income and have not declared it, today run the risk. If the system gets to know of them, then of course they'll have to face the consequences.
And GST, of course, will also make the country more tax-compliant.
GST will certainly make India more tax-compliant, because if your indirect tax revenues move up, and everything gets recorded into the system, now the direct tax income resulting out of that can also be calculated.
My final question to you, Mr. Jaitley. You did talk about interest rates. We're on the eve of the first monetary policy of Mr. Urjit Patel, and of course the new committee that has been constituted. Do you think there's a case for a rate cut?
Let the wise men meet and decide.
The first time ever that Arun Jaitley has reacted on the surgical strikes against Pakistan and the non-impact on the equity markets as well as the currency markets, making a case there for how the Indian economy is so resilient to geopolitics and how even action by the US Federal Reserve has been withstood very well by the Indian economy as well as the equity market.
Indian economy and India, the host economy, there's a huge amount of resilience that we have. Now, every time we faced a challenge in terms of any geopolitical event, it's not a challenge. The impact of it on our markets hasn't been over a period of time. For instance, if the US Fed were to raise interest and there was a speculation, probably the market would see a ripples for a day or so. Foreign direct investment doesn't get impacted. So if you had, let's say, the devaluation in China, or you had a challenge in Greece last year, these were only temporary transient impacts. In fact, the Brexit impact on the domestic markets in India was for less than half a day. At the end of the day, the markets more or less achieved stability itself. Now, even recently, when the news came that India had made certain surgical strikes at the launch pads where the terrorists used to cross into the Indian boundaries, there was obviously a certain amount of speculation as far as the markets are concerned. The impact was not what it would have been years ago. For instance, day one, the markets fell. Day two, they recovered. Day three, they went up. Day one, the rupee lost about 30 paisa. Day two, it gained 20 out of those 30 paisa. So the impact at best is extremely marginal. Foreign direct investment in India continues to increase. And one of the reasons you must bear in mind is that when the going is good and the global economy is doing well, everybody grows across the world. India has adequately demonstrated in the last 2 to 3 years that when the world was not doing well, at that stage to maintain a 7.5% plus growth rate, which was extremely challenging for any economy in the world, we've done it. So 2 years in a row, we were 7.5, 7.6%. This year, hopefully, maybe a little higher than that. And therefore, this is notwithstanding the fact that the global environment has been unsupportive, notwithstanding the fact that the banking challenge remains, notwithstanding the fact that we had 2 years of extremely bad monsoon, a trend which has been reversed this year, and monsoon does impact on the Indian economy. So my own view is that these events, the impact on Indian markets, on Indian currency, or into the inflow of investment, really is going to have no impact.
Arun Jaitley also in Toronto spoke about inflation and how he's hoping the current dip that we saw is going to continue. This assumes far more importance now because Urjit Patel, the new RBI governor, along with the newly constituted Monetary Policy Committee, is going to take a call on whether to cut interest rates or not on Tuesday, while the finance minister is going to be right here in Toronto. So here's the finance minister talking about the macroeconomy with a special emphasis on inflation.
It's a concern, but it's not a challenge that we can't really overcome. Now, 4% is actually a serious challenge. But if you look at the structure of the inflation in India, a lot of it was driven by some aspects of food price inflation, particularly vegetables and pulses. And vegetables is normally seasonal during the monsoons, and post-monsoon it settles down, it started settling down. And therefore the last month's figures did indicate that the downward slide has already begun. I think for the present, pulses is a problem which we significantly overcome. After the new government took over, it took us 2 years, but year after year we started giving a lot of incentive to our farmers to switch over from conventional products, agricultural products, and switch over to pulses. We not only started procuring it, we started giving them a higher rate, we started giving them an additional bonus. And therefore, the gap between the requirement in India, because protein, major supply is pulses in India, challenge now is to arrest the fall in the pulses prices
so that the fall is so steep that at least the farmers next year should still remain incentivized to grow pulses. So I think with the vegetable and pulses prices coming down, which was a major contributory, I'm keeping my fingers crossed for the inflation figure for the next month. Last month it did dip a little, and hopefully that trend should continue.
So that's the Finance Minister Arun Jaitley talking about inflation and the macroeconomy. Inflation being one of the biggest parameters taken into account while deciding the monetary policy. Like I told you, the Finance Minister is going to be here in Toronto when the new RBI Governor unveils his maiden monetary policy. And I'll try and get Arun Jaitley on camera to react on Urjit Patel's first monetary policy. Now, one of the dark spots in the Indian economy has definitely been the banks and the NPA crisis. It was something Arun Jaitley was quite forthcoming about while talking to the students of Rotman School of Management and about all the various steps that have been taken by the government to address the NPA problems.
The economic slowdown globally and its impact on several sectors had an adverse impact on the banks itself. Now, we call it the dual balance sheet problem. Now, there were 4 or 5 sectors in the economy which over the last few years were impacted either because of international or domestic factors. The companies belonging to, the borrowers belonging to those sectors were doing badly and therefore unable to repay the loans back or service their debts itself. Now, take for example the steel sector. This problem was global, with Chinese steel flooding the global markets. The Indian steel companies, which is a core sector industry, started running into losses. And steel became the largest contributor to this non-performing assets because not being able to service your debt, you became non-performing. Similarly, in the infrastructure sector, the same problem arose. It significantly arose in the power sector, the electricity production sector. Now, these were 3 of the main 4 or 5 sectors, and bulk of the non-performing assets are relatable to these sectors. Now, these are not relatable, in rare cases they are relatable to an individual conduct of an industry. But essentially, these were the sectors which were most adversely impacted, and we had to address each of these sectors. So with regard to the steel sector, over the last 1 year, we took a series of steps. Some of them were, in fact, defensive steps. We had to impose a minimum import price for steel coming into India so that the capacity of the Indian companies could be exhausted itself. I think that's had a good impact. And therefore, the balance sheet over the last 4 to 5 months of the steel companies has started turning. Many of them have started servicing the debt. As far as the infrastructure setup is concerned, a lot of infrastructure companies were blocked in litigations. So we had to create a fast-track arbitration mechanism. We had to set up commercial courts, division in every high court in the country. That itself was proving to be inadequate. So last month we took a very bold decision that any company in the construction and the infrastructure setup which against any state agency has an arbitral award, which is under challenge in the court, the challenge can go on, but please pay 75% of the amount so that the company's liquidity is injected into the companies so that a lot of the economic activity can go on and is not stalled by litigation. So that, I think, is going to significantly help. The third sector was the power sector itself, where the problem really power is the distribution of electricity is a state subject. And therefore, this had become almost fashionable in India amongst various state governments to distribute power at a price which was lesser than the cost of manufacturing that power. Now, who would pay the rest? So the law says the state must pay it out of its own budget. So instead of paying it out of their own budget, they were taking loans from banks and paying, subsidizing it, so that whichever is the next government has to refund back the loan. Now that's the principle on which they function. Now this has created a very serious banking crisis itself because most of the debts were of the state government electricity board itself. So we've come out now with a central scheme
by which states have been asked to take over the debt of the distribution companies, take out bonds, and we are trying to resolve the issues.
So why should foreign investors invest in India? Till very recently, we were hearing about how India should be replaced by Indonesia as the I in the BRICS acronym. But the government has certainly been coming out with a slew of big bang reforms. And here's Arun Jaitley's sales pitch to foreign investors.
In the last 2.5 years, at a very consistent pace, a series of steps have been taken by the government. And one of the reasons is that there has been a backlog of certain set of reforms. In fact, some of them should have come much earlier. There's now a difference between what's happening now and what was happening earlier. When India embarked upon reforms, there was a fair amount of resistance from various sections, political and otherwise. I think the entire approach of the country as a whole and the population has altered. India has become far more aspirational, and therefore the support for reform, even outside the political system, now has increased. Now, if you look at the last 6-7 months, there are a series of important decisions. You mentioned two of them, the Goods and Services Tax, the Bankruptcy and Insolvency Code. Now, the high point is not that these were approved. The most significant aspect is that they were approved by a unanimous vote in both houses of parliament. And the fact that it required an endorsement for the Goods and Services Tax of the state assemblies. Now, almost all state assemblies have either approved it, nobody has disapproved it as yet, and it's become a legislation itself. Now, we've had, for example, the Monetary Policy Committee, which advises the Reserve Bank on the rates itself, a long pending reform. We've had rationalization of subsidies through the Aadhaar process, which means every Indian gets a unique identity, as a result of which you are able to target subsidies in the direction of those people where they are really intended. And I think having gone through a lot of legislative agenda, which involves a lot of structural changes, today the big challenge really is also implementation issues. And implementation issues would today involve a very large emphasis on infrastructure creation, because there's a huge infrastructure deficit which still exists. It would involve investment in rural India, particularly because of the inequalities. It would also require a lot of spending in the social sector itself. Of course, we need further to strengthen the healthcare and the educational systems. And I think looking ahead, as you look at the reforms in future, I think these are amongst the key areas where the government is really going to concentrate. In fact, the infrastructure deficit itself was so large that if we start filling up the gaps now for the next several years, we'll require a lot of enhanced spending as far as infrastructure is concerned. And I'll just give you the extent of infrastructure creation which is on. Take the road sector. Now, the road sector, which was started during Mr. Vajpayee's government, building the national highways, last few years it had slowed down. We've put in a lot of resource into the highway sector. In fact, a bulk of the savings that we had from the low oil prices in India, a very large part has been diverted into infrastructure. And currently the national target is that we should be building 30 kilometers of national highway per day. Now, we are currently at about 22 kilometers per day. And therefore, this further needs to be enhanced. In between, it had come down to a single digit, because that was the kind of gap which existed. We need to connect every village in India with a regular road. Now, this didn't exist. Now, this year itself, in the budget, I had enhanced the spending on the road sector between the central and the state governments 3 times the usual spending so that this process itself can be enhanced. Overall, in the Indian Railways has a very large network. But to improve the quality of Indian Railways itself, now the kind of initiatives which are currently being worked out, now from a policy which was only populism, announce more trains irrespective of whether you are able to implement them or not, that's how it was being governed. Today, a lot of reforms in the railway sector are on. For instance, one of the major reforms is from next year onward, we've abolished something called the railway budget. I've merged it with the central budget itself. It will be a part of the national budget, so it will have a structured fiscal direction itself. We've allowed a lot of private sector, including foreign investment in the railway infrastructure. So whether it's railway engines or locomotives, the manufacturing now is also being done in a big way by the private sector itself. We earmarked 400 railway stations in India, which is prime property in almost every town, which are now being re-established, rebuilt and redeveloped by private sector participation. Some of the tenders are out, the contracts are now being awarded, and over the next decade or so, you'll see this massive activity as far as railway stations is going to be concerned. Railway safety, facilities, superfast trains, the first bullet train project. Now, these are all initiatives in the infrastructure which is on. More ports. So this year we've announced 2 more ports. This year we have around 70 functional airports in India. The idea is to now over the next few years add 35 more regional airports. So if you see each of the areas of infrastructure development, it's a massive program which requires a lot of investment. And obviously we need a lot of resource, domestic resource, when the budget itself may not be adequate. Therefore, we are attracting a lot of international investment as far as this area is concerned. Manufacturing for us is extremely important for several reasons. Now, if we are to continue to grow at a higher level and the GDP has to grow, let's say at 8% plus 9% in that range, the share of manufacturing itself has to move up. We can't be dependent only on services. Agriculture, though a large number of people employed, a lot of people need to move out of agriculture because there is underemployment and get into other sectors of the economy. Services will have a capacity to absorb some, and therefore big jobs are going to be created as far as manufacturing is concerned. Now, we missed out on several industrial revolutions of the past, including the low cost and so on. I think now a time has come where there are areas where we found our strength. The automobile sector, the pharmaceutical sector, right. These are areas where we've done well. And currently, if you look at the wage structure, I think that's one area we get an advantage even over China. Right. Because the wages there, our wages have become more competitive compared to them. And therefore, the possibility of India getting into and that's why the entire policy now has been reoriented. We've opened up foreign direct investment in almost most sectors, including defense manufacture, which was entirely import dependent. And therefore, sector after sector, we've not only liberalized the investment norms, we have surplus power today in India. We always had a power inadequacy. Today, we have more power that we produce than people can use it. And therefore, with infrastructure building up, an increased emphasis, more competitive ability itself, I think the emphasis now on made in India appears to be a very strong thrust.
So the tall building you see on your screens right now is the headquarters of CPPIB, or the Canadian Pension Plan Investment Board. It manages over $200 billion globally, and the Finance Minister as well as the Secretary of Economic Affairs, Shakti Kanta Das, will be meeting with the top management of the CPPIB, hard selling the India story, convincing them to invest in Indian infrastructure as well as the NIIFs that have to roll out. We'll be getting you interviews with the Finance Minister as well as Shakti Kanta Das post that meeting. For now, we're totally out of time, so I'm going to sign off and say goodbye to you from here in Toronto. Thanks for watching.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.